Welcome to FT Markets. There's been a flurry of excitement in Tokyo ahead of this week's Bank of Japan policy meeting. The yen, which has been stuck in something of a rut with the dollar for most of this year, has broken out, and that is fueling in currency traders opportunities for buying and selling. With me to discuss this is our Tokyo correspondent, Leo Lewis. Leo, what's the reason behind the dollar yen being so moribund, and why is it breaking out now?
Well, it's certainly been the last few months that we've seen this very tight range between 118 and 120 yen against the dollar, and analysts, FX strategists out here have been writing ever more kind of pleading notes to their clients, trying to explain why this has been the case. A lot of the theorizing centers on the idea that 120 yen essentially breaks down into a constituent. Is the fundamentals of the currency and the froth on top, which is speculative positions held by the hedge funds. And over the last 3 months, the view is that perhaps in March, when this real rut set in, about 108 of that was the fundamentals, and 12 yen was the froth. And now the feeling is that balance has shifted to about 115 yen of that being fundamentals and 5 yen of froth. So the idea is that all it will take now is a couple of catalysts for the hedge funds to come back in with some of their short positions, particularly as they're looking at those as an alternative to euro short positions, and that they will come back in and add a little layer more into that breakdown, bringing the yen to perhaps the 123, 124 region by the end of the year. That seems to be what a lot of the strategists out here are predicting.
Okay, well, let's have a look at our first chart, which is the Nikkei over this period. And obviously, while it's been in a rut for some people, it's actually, the yen has provided some stability, Leo, to enable some foreign investment into Japanese equities.
That's right. So you've had a market that really has been moving initially, sort of when Prime Minister Shinzo Abe was first elected, and we first started hearing about Abenomics. The story there was a tide that was lifting all ships. You're now looking at a market which is increasingly, talking to the brokers out here, they're increasingly talking about a market which is more and more a stock pickers market, or at least it's going to be one where we're going to be looking first of all at companies that are able to turn a very decent profit in the current yen environment. And obviously, as the yen improves from the point of view of exporters, they're going to be even better placed. So there's stock picking on that basis. There's also been a certain amount of looking at corporate governance and which stocks may be favoured by large investments through the big Japanese pension funds, public funds, and so on. So there's a sort of transfer in the way that this market is being invested, and one of the big focuses of which companies are going to be profitable will be how they're exposed to the yen and how profitable they're expected to be in an environment where if they are, for example, targeting 115 yen like Nissan said it was last year, 100 everything that falls away from that, 120, 123, perhaps by the end of the year, that all looks pretty good for companies like Nissan.
Well, let's have a look at the second chart, which is obviously the dollar yen and its decline. And the question is, how low could it go? This is about how Abenomics is perhaps going to bring out another round of quantitative easing. Where does the Bank of Japan really want it to be placed? Perhaps it actually likes it to have settled into this range.
Yeah, I think that's the other thing that you are hearing is that there's not a clear chatter or a clear rhetorical position that makes you certain that they want it to really break out significantly. Some of that we've heard may have to do with the negotiations in the US over the Trans-Pacific Partnership, this big scheme that's been on the table for a long time and requires particularly Japan and the US to appear to be diplomatically playing as nicely as they can. And part of that will always be neither side making great big talking their currencies into a position they think is politically favourable on the domestic front. So the US side, with possibly with the news cycle approaching the presidential election cycle, they don't want to be talking the dollar in one way or another at this point in the negotiations. Japan doesn't want to be talking the yen too weak. If those negotiations conclude, as some suspect they will over the next few weeks, we may see a change in that position. But at the moment, it may very well be that actually this is a reasonably satisfying level for everyone.
Okay, well, thank you very much, Leo. So the yen is back on the move. The question is, how far is it going to go, and to what extent is the Bank of Japan going to try and influence its position?